Tomorrow, U.S. inflation data will be released. Markets were mixed today as they waited for the news. Let's go to Barry Schwartz, Chief Investment Officer, Portfolio Manager at Baskin Wealth Management, to talk some more about what's been going on. Thanks for joining us.
Hi, Marella. How are you doing?
I'm good. What are you going to look for in tomorrow's inflation data from the U.S.? What also, if you want to take the next step, could it mean for a rate cut from the Fed?
It's a good question. None of us will know what the data is going to bring. Of course, it's been very tepid lately, right? The concerns about the tariffs haven't really had that much impact on inflation. We saw Canadian inflation really tame. So we're expecting not much of a big news event because of the CPI. And I think the U.S. is still on track for 2 to 4 rate cuts this year and more going forward. So much pressure, of course, by Trump on the Federal Reserve, but they're waiting for the data, not the vibes, so to speak. And the data is still on the inflation running a little higher than what they want. But let's be honest, the inflation number right now is a trivial one. It's not important. It's come down to a very low level and within the range that it's been for many, many years. And so I think it's something that the markets will, quite frankly, ignore unless it creeps up dramatically. Okay, so you're describing tariffs as a non-event. Why? Look at the data. Look at the inflation data that's come out already. Look at the corporate earnings. One of the interesting stats by FactSet today, looking at S&P 500 companies, very few of them are mentioning a risk of recession, whereas in the first quarter, many of them were worried about the risk of recession. You had trucking companies like TFI International, Canadian investors know that name, of course. TFI said that it looks like its business has stabilized, right? And so truckers are one of the worst places you want to be if you're having tariffs. So, I honestly, the macro stuff is very hard to play day to day, but if you look at what companies are saying, they're very, very bullish. Another stat that I looked at today is new business applications to start businesses in the U.S. at record levels. Something positive is going on. So I would say to investors, we've got inflation that is tame. We got interest rates that are coming down. We've got corporate earnings at record levels. You got that big, beautiful bill that's passed, which will lead to tax cuts and should boost earnings per share going forward. And of course, you've got the top 10 S&P 500 companies, having significant tailwinds to AI, which is driving their bottom lines and top lines. So I think it's pretty nice environment to own equities here. That being said, you say some of the big tech will begin to slow down. I know you've got a chart. We'll pull that up in a second. But you think Microsoft, specifically Amazon and Meta, will have the accelerated growth. How did you land on that? Well, I just looked at the estimates by analysts going forward over the next 2 to 3 years, and it looks like there's going to be accelerating growth, earnings per share growth from Microsoft, from Amazon, as well as Meta. Google, of course, hard to know, lots going on there. NVIDIA, such a phenomenal story, but of course it can't grow at 50% forever, so that growth has to decelerate, as well as Broadcom. Some of those direct AI plays, the growth will slow. But let's face it, those numbers that the companies are producing are incredible and way better than the average S&P 500 business. And if we do believe that AI continues to scale, I think you want to have some exposure to those kind of names. What are your AI-related stock picks? Well, right now, our clients own shares of Amazon, of Meta, of Microsoft, of Apple, did I say Alphabet, and Taiwan Semiconductor. So, we have a pretty good generalist exposure to AI. We're not really that comfortable in drilling down and buying speculative AI plays. We like to own profitable businesses that make a lot of money on their core business. And if AI works for them, great. If AI doesn't turn out to be the greatest thing that the market thinks it is, then Google will be fine. Google search is still going to grow. So our top ideas right now are really Google and Taiwan Semi, and that's really because of valuation. These are companies that are growing top lines and bottom lines at double digits. Taiwan Semi is actually guided for significant growth over the next 4 to 5 years, and both are trading around 20 times earnings. So some of these AI stories, of course, NVIDIA's at its highest multiple has been in a very, very long time. If some of the froth comes out of that name, I would expect it to go into some of these cheaper valuation names like Meta and Google and Amazon and Taiwan Semi.
On the Canadian side, you like Constellation Software. It's a pretty big holding for you. Tell me about it.
It's our largest holding across clients, and it's one that we've held, I would say, 7 or 8 years. Wish I owned it sooner, of course, but Constellation Software on Friday night, this is a company, it's kind of like Berkshire Hathaway. They don't do conference calls. They only do a once-a-year annual meeting. Now, of course, they're doing their meeting virtually. They don't do and the press release, it tells you a lot, but this is not a promotional company. And like Berkshire Hathaway, Constellation Software continues to compound its free cash flows at very high rates. What I was excited about when it reported its earnings on Friday night was Constellation growth accelerated. This is a company that generally buys some, we'll call it not the sexiest, fast-growing software businesses, but organic growth returned to 4% in the quarter, and the acquisition that it made of a company called Altera has been phenomenal. The recovery of Altera's results in the quarter were so good that it looks like Constellation Software is not only a great acquirer, but a great operator, a company that knows how to make these acquisitions of distressed companies and turn the results around. Margins are up at a nice clip, and the stock is still well below its all-time high. The other thing that I'll say is lots of people are worried about AI disrupting software. We'll see if that's going to be the case. Our view is that the companies that have distribution will use AI to their advantage and upsell to clients more products and services as a result of AI and be able to cut costs for their overall business. So we're not so negative on software. And I think for investors, this is probably one area that you should start looking at. A number of names like Adobe and Salesforce, Constellation Software, Intuit, all these names have pulled back lately as worries about AI disruption is all over Twitter. But I'm not sure it's actually being seen in the fundamental results.
Got it. All right, Barry Schwartz, got to leave it there, sir, but thanks for your time. Barry is the Chief Investment Officer, Portfolio Manager, Baskin Wealth Management.